So many of you are trying to get that 100 pip move or that 50 pip move, and I'm here to tell you that 10 pips is all you need. So in this video, I'm going to show you how you can get 10 pips. Welcome back to the channel, everybody. My name's Artie, and this is The Moving Average, a show where we discuss everything day trading to keep you profitable on a consistent basis. You guys see how I trade based off of 3 specific moving averages: the 21, the 50, and the 200 smoothed moving averages. So whether you're trading with the trend or against the trend, I'm going to show you how you can identify areas in your trading day where you can manage to get 10 pips. Let's jump into the charts. That was totally dumb, but I'm going to leave it in there. So just a brief recap if you guys have not seen that video. The way that I like to trade is based primarily off of the 200 smoothed moving averages. If we are above it and we come down to retest, I go for long positions. If we are below it and come up to retest, I go for short positions. And also, if the price is trading between the moving averages and I start seeing a slope, I will scalp between the 50 and the 200. So again, a break and a retest going long, break and a retest going short, and scalping in between moving averages. These are my 3 primary sources for my trades. Now, this is Australian dollar, US dollar. It's got nice price movement and it's my preferred Forex pair to trade. Right here, I've drawn a box. This box is exactly 10 pips. You can see in between these moving averages, we get 10 pips. And also on breaks and retests, we get 10 pips. 10 pips is very, very easy to get in the Forex markets. Also depending on the pair, but very easy to get. Now, one thing you have to keep in mind is what time do you trade? Do you trade the London session or do you trade the New York session? So using indicators to show you your exact trading session, it not only helps you identify your windows for back testing, but it also helps you while you're live. So for example, during any one of these trading windows, the market definitely moved 10 pips. Now, the only question is, do you go long or short for that market session? So let's do a little bit of back testing. Right here, this is before the market opens. Here is my 10 pip window. The market's about to open. We are below the 200 period moving average. Asian session was obviously consolidating. Are you looking for long or short positions? The market is going to open up right here at 9 a.m. for me, London session. So let's fast forward this chart and see what happens. All right, so we've had our break. And now we've had kind of a retest right here. And if you guys have followed my videos, you know I like to trade engulfing candles. So this candle engulfed this candle. So this would be my entry point. And you got your 10 pips within 1 hour. Now let's fast forward the charts to the next day and we will see what the next session has to offer. All right, here it gets kind of tricky. We are already very far away from that 200 moving average, but we've had these big bullish engulfing candles showing lots of momentum, keeping us very far away from the 21 moving average. You have to be patient and wait. And there it is. Opening candle is huge, big, and engulfing. So we take our 10 pips, enter in on the close of that candle, and within 1 hour, we hit our take profit of 10 pips. Now with this 10 pip strategy, I'm not looking for anything more than a 1-to-1 risk to reward ratio. So I'm risking 10 pips to get 10 pips because if the price goes back 10 pips, I know I was wrong on my entry. And as you can see right here, if this was your stop loss, you did not get stopped out. So you guys know that I prefer trading with the trend. It's much easier to get the moves when it's a trend continuation. But if you're in a situation where the price is very far away from the 200 period moving average and it doesn't seem like a smart option to go in on a trend continuation trade, what you can do is actually wait for the price to break the 21 and or the 50 and retest it. At that point, the moving averages should start curving, and when that happens, it's got the support now to go up. And with that 10 pips, once it's broken the 50 or retested the 21 or retested the 50, at that point, then you can scalp the price in between the 50 and the 200. Also having your RSI up, because when you're looking at trend reversals, you should be also trying to spot an RSI divergence. So let's get rid of my little squiggly lines here and watch the market open. All right, so we're trading now above the 21. We're now trading above the 50. What we're waiting for is actually a retest of that 21. I didn't stop that in time, but right here you can see we got an engulfing candle pattern. This was the come down to retest, and then this is the engulfing candle to say, hey, we got support right here. So you would have taken your 10 pips and you would have put it right there at the close of that candle. And hopefully this plays out. Now this one took a little bit more time, and this is why I don't really advocate trading against the trend, because it takes a lot of resistance to go against a trend. But within 3 hours, you got your 10 pips. And if you look, we did not get our stop loss hit because we waited for that retest. Now, why am I saying 10 pips is enough? If you're trading one standard lot, each pip is $10 in profit. So a 10 pip stop loss is going to be $100, and a 10 pip take profit is going to get you $100. So using proper risk management, only risking 1% of your account balance, that means that if your stop loss is $100, then you have a $10,000 account. Now, if you want to get more risky and risk 2%, all you need to do is make 2 trades. You'll still get your 10 pips, but you'll get it in 2 trades. And that means you got 20 pips, increasing your risk from 1% to 2%. And as you can see here, if I was waiting for a 100 pip move, it would have taken me a very long time to get it. And if you're trading on the 5-minute or the 15-minute and you're scalping, this is the best way to do it. I know this seems simple, but what you need to do in order to know how to do this in every single situation is watch a majority of the videos that I've made on this channel. There are over 100 videos now teaching RSI divergences, teaching breaks and retests of trend lines, of moving averages, of support and resistance levels. This is the entire casserole, people. Everything that I teach is all in one, and knowing all of that information is going to make it ridiculously easy for you just to sit in the market and grab 10 pips and then go on a bike ride. So what I need you to start doing is watching all of my videos all over again and getting a refresher course. And you can start with this one right here. This is the #1 rule in day trading. And if you guys enjoyed this video and you got some value out of it and you like the way that I teach, consider subscribing to the channel by clicking this button right here. Thanks so much for watching, and we'll see you in the next one.